Hello and welcome. You're watching the newsroom right here on ET Now. I am Jain Sharma. The markets are consolidating after hitting fresh record highs. FI flows are pouring in, and there is no, easing off of the overall rally. Globally too, we are seeing fresh records being made. So the world right now, awash with liquidity, is in a very strong momentum. Let's talk about all of that and how should you be approaching the market with two special guests on our show. We've got Anu Jain from IIFL, who's seen many cycles, and Rahul Sharma is also here, which will talk about stock picks, but that a little later in the show. First, Anu, how are you reading the powerful up move which is playing out in the market? From March to now, what kind of trends are you taking shape?
Hi, good afternoon. Well, we've seen, everybody who was expecting a correction, including us, go completely get surprised by the complete furiousness of the rally, especially in the last 1 month where we've got a record inflows. Yes, we have. But if you look at it in the world market scenario, we are participating with the world market. So my team put together a note today morning, which is indicative of how the world markets are rallying. So if you look at the various global indices, so you look at the Vanguard World Market ETF, which is quoting at 89.45. This ETF comprises basically developed markets 90% and emerging market 10%. And that's also given a break above the extended trend line at 85 levels. So the targets are about 91, 93, which is about 3 to 4% from where we are now. You look at the iShares Emerging Market Index, that's also outperformed the developed markets. There also now the upside is approaching a resistance at 51 levels. But again, you've got supports between 46 to 50. Even at the MSCI Developed Market Index, it's right now in a consolidation phase between 103 to 109 levels. The target is 113. And you were just talking about the Dow Jones. So Dow Jones has given a breakout, and there you are seeing a medium-term upside target of between 30,800 to 31,400. Supports are closer to 29,000. So it is an overall move. You look at Europe, you look at DAX there. DAX is approaching 13,300, and it needs to break through this resistance level to go back to the March high of 13,800. So what you're seeing in Nifty and Bank Nifty is basically completely correlated with this. So the rally is global, and you will participate with it whenever a pause comes there for various reasons. We will see a consolidation, but I think you are in a sweet spot right now. If you look at Nifty, you're in a consolidation phase between roughly between 12,700 to 13,150, which can extend to 13,400. So we are in the same consolidation range as I'm pointing out to the global indices. And I think next 2 or 3 months, this is going to continue in the same fashion. You may see a short break in December when international FIs take a break for 15 days, but I think it will presume and resume back in January.
Anu, how are you really discussing the strategy ahead with your big HNI clients, both on the trading side as well as on the delivery-based portfolio allocation side? What kind of conversations are you having with them lately?
So long-term investors, where the portfolios have been sitting on some cash, some amount of banking is being bought. We've added banking to our model portfolio about 10 days back. We've taken it up from being slightly underweight to being equal weight to the banking indices, and that's being bought for clients. For the trading clients, it's a completely different conversation because what they are playing on, so while the model portfolio plays very high quality, absolute 5-year stocks, people who are on the trading side can obviously pick up high beta, and we've seen that play out, when the RBI licensing, was announced, and you saw right from an IDFC to a Ujjivan, all of those play out. So those options and those things are completely different. And we are seeing right now, whether it's a Bandhan or an RBL or such names where, they are they've been underperformers, but it's a catch-up trade. They may not be stocks that you want to hold on for 5 years relative to an HDFC Kotak. I'm not saying that they shouldn't be held on, but relative to an HDFC Kotak. But maybe a catch-up trade exists there on the trading side. Whereas long-term clients who are building their portfolios and for 5 years, there you would stick to the bellwethers, you would stick to the frontline stocks rather than go even below the Nifty 50.
Right. All right. Thanks very much for that, Anu. Anu Jain from IIFL Wealth, talking about how to really look at the charts in this big breakout and what stocks should one be latching on to in all probability, which may actually give you good return even from here. Rahul Sharma is also joining us with his own stock picks. Rahul, let's start by talking about Manappuram Finance. That is one stock which was done phenomenally well and then went sideways. Why do you like it?
Ajay, first of all, very good afternoon to each and every viewer. And see, Ajay, actually with Manappuram Finance, there is a technical consolidation breakout, which we have observed in this counter. And also that that other NBFCs has performed really well in the latest past, and this company has remained in consolidation. And fundamentals here are also very much in favor right now, as company has delivered good profit growth of around 40.42% CAGR over last 5 years, and company have been maintaining a healthy dividend payout of around 20%. And right now it is available at a very much attractive PE multiple of just 8.77x, which is lowest in its peers. And targets which are coming here is rupees 200 in 2 to 3 months, with stop loss of rupees 155 in Manappuram.
Vishaka Industries is also another stock which you really like. It's a textile company, if I'm not wrong. Why do you like that stock, and what kind of targets can investors look at over a 1 year period?
Yeah, actually textile, but see, this Vishaka Industries is engaged in the business of manufacturing of cement fiber sheets, fiber cement boards and panels, solar panels, synthetic yarns. See, these products is majorly used in building material of rural development. And government of India is also working on projects of building 2 crore houses across rural India. And speaking about fundamentals of this company has reduced the debt. The stock is trading at 1.04 time of its book value. Stock is providing good dividend yield of 4.15%. Company has been maintaining a healthy dividend payout of around 27.24%. And operating profit reported in Q2 of financial year 2021 is more than double of which was in Q2 of financial 20. So, and net profit is also doubled from Q2 of financial year 2020. If the stock gets closing above 385, then with good volume, stock has potential to reach around 420 to 430 levels in coming 3 months, and stop loss will be placed at rupees 350 in Vishaka Industries.
Rahul, some of the PSU stocks have done phenomenally well after IPO. HAL was one of them, and that is again on your buy radar. Talk to us about it and the target one can expect over the next 1 year.
See, HAL, the Hindustan Aeronauticals Limited, all we know that this is a defense PSU stock. Hindustan Aeronauticals is engaged in the business of manufacturing of aircraft, helicopter and repair and maintenance of aircraft and helicopters. Stock has seen its worst time in recent past because of OFS, and now that is over. Stock has made a high of rupees 1423 on 14th August 2020, and right now it is available in just half price around 800 levels. And we got to know that government is also focused with major defense plannings, which makes this counter even more attractive. The stock is providing good dividend yield of 4.20%. Company has been maintaining healthy dividend payout of around 40.39%. Reported sales have been increased as well as the operating profit. And in this counter, investors must accumulate the stock on every decline with a target price of rupees 925 to 930, and stop loss will be placed at 760 in HAL. Over to you, Ajay.
Right, and leave us with your view on the market as well, Rahul, for a moment, because a lot of people are asking whether is this a good time to be in the market. One should book profit or light in positions. Some are saying the breakout is still taking shape, stay on. What are your thoughts?
See, Ajay, my thoughts are to be very much cautious. See, first of all, we have to be very much cautious as on the top levels which Nifty has made today at 13,150. As we can see, good amount of profit booking at this high levels of Nifty. Unless these levels are breached, we get closing of above 13,150. Till then, we have to be very cautious for upside trades. On downside, Nifty has a strong support at 12,900. If Nifty breaches this point, then again rally of 200 to 300 points downside will be continued till the levels of 12,600.
No, I'll take break. Right. All right,
I can't hear you.
Rahul, I'll let you go on that one. Thanks so much for joining us on the show today. With that, we'll take a break. More news and analysis on the other side of this break.